All right, everyone. Sorry I have a summer cold, so I sound a little froggy. But this is our Budget Audit Board of Review Committee meeting for Wednesday, July 15th. And I believe we have a quorum. Ashley,
Yes,
can you do roll call, please?
Councilmember Harris.
Here.
Councilmember Willard. Councilmember McCarron.
Here.
We have a quorum.
All right, I'll go ahead and move for approval of the Budget Committee meeting minutes of June 15th, 2026. Seconded by Councilmember McCarron. All in favor? It passes.
All righty. Item number 3 is a motion to approve an agreement between the City of New Orleans and OpenGov to allow the city to adopt the OpenGov 311 module, and I believe Mr. Wisby is here on behalf of the administration to talk about the motion.
Good morning, Mr. Wisby.
Good morning, council members. Jonathan Wisby, Chief Innovation Officer. What you have before you today is an extension and amendment to our OpenGov contract. This is a contract that we publicly bid several years ago, and we just finished in May launching the city's asset management system, which is currently being used by DPW primarily, as well as some other agencies. It allows the city for the first time to track maintenance histories across individual street level public assets, things like street lights, traffic lights, those sorts of things. What this amendment before you would do is extend the contract for just a little bit shy of 3 years, authorize the city to pay maintenance payments on the asset management system we already have deployed, reauthorize a geocam investment that was initially authorized in December of 2025 through a separate amendment this council passed, which will allow us to collect that type of asset data from within city facilities for property management to be able to more effectively maintain and service city facilities. And then thirdly, to add the 311 module, which will essentially function as an intake module for work orders that will be fed into the asset management system. So when a resident calls because they have an outage in a street light or a traffic signal or something of that sort, it will allow them to associate with a specific asset number and then track the work order that then gets sent out to the DPW maintenance crew to allow for better tracking of this type of maintenance request. The issue with the current 311 system, which we had originally envisioned integrating with the asset management system, is that it is an address-based system where it is not geographically and geospatially calibrated. And so as a result, you have an address where there is a potential outage, but many of these public assets are not associated with addresses. There's no address, for example, for a traffic light. And so it limits the city's ability to generate work orders on those assets within the system. So this will allow us to more effectively intake and manage resident issues that get reported and ensure that there are work orders routed for those items.
Are there any questions? Councilmember Willard?
Hey, Jonathan, is the 311 system integrated with OpenGov right now, or is this going to be
No, sir.
something totally new?
Yeah, we had initially intended to integrate the two systems, but once we did some greater technical discovery, we learned that the QuickBase system that is currently being used by OPCD effectively cannot be integrated with the OpenGov system because of their use of geospatial data and the fact that you cannot translate the addresses to the specific geospatial location of that asset. And that's when we decided we need to go to a plan B and upgrade the type of system that it is. I think the QuickBase system as it was originally developed was basically to meet an immediate need, but it's now fallen behind from a technology standpoint. It's no longer an effective 311 system, I would say.
What's that transition period going to look like? Do we anticipate that to be relatively seamless or?
Well, sir, the truth is that in every IT project I've done, I don't know if I would describe any of them as seamless. There are always technical difficulties you encounter along the way. I think what this amendment does is allow us to launch this project beginning in August. We still have some work to do on the exact timeline in the development of the project plan, which will begin after the amendment. But my expectation is you're probably looking at months, so you're potentially looking at something later this year, early next year, launching publicly. I wouldn't use the word seamless, and I'm sure we'll encounter, difficulties as we go to implement. But I think the fact that we are using a module that's already integrated with the asset management system eliminates a lot of the technical complexity related, that is involved in integrating two different IT systems.
Okay, can you just keep us posted on that transition process?
We will do, and as we're getting ready to launch, I think we'll also let you all know in case you want us to come in front and do a presentation on sort of what that means for residents.
Okay, thank you, Jonathan.
Yes.
Any other questions? All right, with that, I'll move. Can I get a second? Seconded by Council Member Willard. All in favor? It passes. Thank you.
Thank you.
Item number 4, calendar numbers 35,484 and 35,485, which is transferring 17.1 almost million from IGR to the Housing Bond Fund. I believe Liz Holman will present.
Hi, Liz. Can you
Hey.
go ahead and talk about this?
Sure, yeah, so this is moving some old 2021 and 2024 bond funds that were put in the Housing Trust Fund kind of as a placeholder to a new fund called, I believe it's the Affordable Housing Bond, something along those lines. It's from 5155 to 5157. Basically what it does is it's going to allow us to pay for several projects that we're already under contract on and have the accounting just a little more clean.
Any questions? Council Vice President Willard.
Were any of these projects supposed to be funded with the recent bond sale that we did?
No.
Okay, the reason I'm asking, I was just wondering if it freed up any money for the upcoming bond sales that we're doing. So this was always,
Yeah, it's Iris Riverbend, Grove Place 2, Lafitte Phase 7, and BW Cooper.
okay, so
those
this
are-
is just to kind of clear up some of the financial.
Yeah, and this has been
financials.
kind of a long-running pipeline for those who were here last term. We were working through that, trying to figure it out.
Okay, thank you, Liz.
Sure.
Any other questions? All right, with that, I'll move. Seconded by Councilmember McCarron. All in favor? It passes. Thank you, Liz.
Thanks.
Item number 5 are calendar numbers 35,487 and 488. Both of these items will be referred to the full council meeting of July 23rd for discussion and vote. Item number 6 is a presentation on the completion of the fiscal year 2025 audit, and Becky Hammond from CRI is here to present.
Good morning, Becky. Will you introduce yourself, and you can start when you're ready.
Yes, good morning, council members. My name is Becky Hammond. I am the audit partner with Carr, Riggs & Ingram. We are the audit firm that performs the audit of the financial statements for the 2025 fiscal year. I'm happy to be here today.
Becky, can you just pull the microphone a little closer so we can hear you?
Sorry about that. Is that better? Okay, thanks. I'm happy to be here today to report that for the second time in our contract, we were able to issue the audited financial statements on time by the June 30th statutory deadline. I do want to recognize that this was a very big feat, given some of the challenges that have occurred in the finance department. And I really want to take the time to say thank you to the finance department. They really worked very, very hard in coordination with my team as well, and the team with Sean and Bruno CPAs, who is our DBE. And I really feel like it was a culmination of team effort on all parts in order to get this audit out on time. We understood the task. We understood that it was very important that this audit not be late, given all of the financial implications of that, and so we made it happen, and I just couldn't have done it without joint effort on both sides. So I just want the council to know that that everyone involved worked really, really hard to make this happen and make it happen on time. So I have for you, for basically just an audit presentation to go over the highlights of the audit. And so I'll move on to the summary of auditor's results. Yes. So overall audit results, we issue 3 reports to the city for our part of the audit. The first is the independent auditor's report. This is the report that everyone looks at when they're looking to see how an entity has done. And I'm pleased to report that it is an unmodified opinion, which is considered a clean opinion on the financial statements. Our second report is our independent auditor's report on internal control over financial reporting and on compliance and other matters based on an audit of the financial statements performed in accordance with government auditing standards. And I had come to you several months ago and kind of explained what that is, but that's basically the yellow book standards that are required by Louisiana law, which means that we do some additional things besides just audit your financial statements to ensure that you have compliance with matters involving state laws that are related to financial matters. So for that opinion, we did have some findings this year. We had a material weakness reported, and we also had a non-compliance reported. I'm going to go over that in the next slide in a little more detail, just to give you a little more understanding of what that was. And then our third report was our independent accountant's report on applying agreed upon procedures. This was the statewide agreed upon procedures that are required by the Louisiana Legislative Auditor that the legislature set up. And this involved 14 different compliance areas where we have to do multiple procedures in each area in order to ensure that some of the basic things are being done at the city, and also some of the best practice internal controls are happening at the city. And I'm actually, while we had exceptions in this area, I'm very pleased to report we only had exceptions in 2 areas, bank reconciliations and collections, which was actually a significant improvement over previous years. And those exceptions were pretty minor. The bank reconciliations exception had to do with the timing of when the bank reconciliations were reconciled, but they were reconciled before the audit, so no issues as far as the audit was concerned. And for the collections, there was one exception related to, for 2 of the 5 collection locations that we tested, there were 2 or more employees that share the same cash drawer. Again, this is kind of a best practice situation. You try not to have people sharing cash drawers, but sometimes it's just not practical to have that happen. So, so that's something that, you know, the city would just look at to see if it makes sense to even separate that. And then the last exception, for 3 of our deposit dates selected, there were deposits that had not been made within 1 business day of receipt, ranging from 2 to 10 business days after the receipt at the collection location. And so this is because you are taking collections in at various different locations throughout different locations throughout the city. Those deposits are not getting to the bank as timely as the best practice would allow. I think that is actually a specific law, but the law itself is kind of vague as to what that really means. So that's just something to look at to see, you know, is it practicable to try to get those deposits in more timely. As far as the findings for this year, we did, as I said, have a material weakness and a non-compliance. The material weakness involved some prior period error corrections that were actually identified by city accounting staff and brought to our attention proactively. So I always look at that as a positive, you know, thing to see. However, because they did affect prior periods, we did have to treat this as a material weakness because this was a material amount that had to change numbers for last year and resulted in a restatement of the prior numbers. This involved some unrecorded revenue proceeds related to the Go Mesa bonds in the debt service fund. of about $2.5 million, and then some unrecorded workers' compensation expenditures in the general fund of about $8.4 million that were sitting in a liability account and needed to be expensed. So those corrections were made, and discussions were had about what needed to happen going forward to ensure that those items, those errors did not occur again, and all of those changes to their procedures have already been put in place, and the matters have been resolved as far as what I've seen so far. So I don't expect any of those problems to occur again. The second finding that we had was related to the underfunded retirement plan, which is the firefighters' pension and relief funds. This has been a finding since 2017, but what I'd like to highlight here is the fact that the new system has hovered anywhere from 7 to 12%, and in 2025, it's up to 18% funded. The old system has been as low as 2.82%, and it is up to 25% funded in 2025. So the funding percentages are going up, and some of that is market dependent, but also that you're continuing to just make contributions to the plan based on the required actuarial amounts that the actuary says you need to make. So that's slowly being rectified. It's just still at that very low level where it's considered a non-compliance. So hopefully we'll see some improvements there, and that will come off in the near future. So on to our overview. This is basically just a bird's eye view of the net position of the city. This is everything government-wide, including all of your funds, all of your capital assets, all of your long-term liabilities. And so we did have an increase in net position overall from $930 million to $1,072 million. And the biggest factors involving this is the fact that there was a lot of capital investments, and then quite a significant amount of reduction in long-term liabilities. And I'm going to go over that in a future slide to give you a little better appreciation for that. As far as capital assets, again, here you can see that we did have some significant increases in building and improvements and infrastructure, some reduction in construction in progress where about $141 million moved from construction in progress into those other categories. But overall, we did have an increase after depreciation of almost $300 million for the year. Now, normally when I do these presentations, I like to give a 5-year look back, and I also included the 2026 budget for perspective because, this administration and this council have done a lot of work already to make changes to your fiscal policies and to kind of change where things are going. So I'd be remiss if I didn't include that. So this is just your sales tax receipts over the last 5 years. We can see a pretty steady trend upward. And then I think the budget is because you were probably conservative in budgeting. I know that you had been reported to as of April 16th that you had already collected 25% of that $271 million budget for sales tax. So I imagine that will continue to trend in the same regards, but sales tax seems to be down in other parishes as well, and so that conservative estimate makes a lot of sense. As far as ad valorem collections, That we're seeing a downtrend from the last 3 years, and so again, your budgeted number makes sense. Again, it was reported to you as of April 16th that you had already collected 92% of that 276 million. So I'm sure, I would expect that your actuals will be over the budget, which is a good thing. All right, for general fund, this is the slide I think everybody wanted to see and wants to know about. So we can see the gold is cash balances and the blue is your fund balances. We can see kind of a high in 2022, and we're down in 2025 to 67.3 million in fund balance. That is a $138.3 million decrease from prior year, which consists of $129.9 million from the 2025 deficit, as well as the $8.4 million of prior period restatement that I mentioned earlier. So that gets you to that 138.3. In the next slide, I'll give you some perspective of what that fund balance means as far as future. But I also want to highlight, while the cash, and I apologize, I should have put your investment balance here as well, because I think that tells a story, so I'm going to elaborate there a little bit. But your cash did increase $124.8 million, but that is because you liquidated $186.4 million of investments. So you're really down a net of about $62 million when you look at cash and investments altogether. But I think the positive is, and obviously that cash has the proceeds from the revenue anticipation note in it. So that explains why that cash position was so high right at the end of the year. This graph shows you the general fund equity as a percentage of expenditures. And basically the GFOA says that they recommend that you should have about 2 to 3 months worth of expenditures in your general fund. So that's about 16 to 25% when we look at that in comparison to this graph. So you can see in previous years, we were well over that in 2024, probably right in line. And then in 2025, as we all know, we're not really where we needed to be. You've already made steps to make those corrections, so I don't think we need to harp on that any. But ideally, while I think the 2 to 3 months is a good idea, I think given the challenges that this city has, and also the concerns that we have with hurricanes and other natural disasters, a better target probably is more in the 50% for 6 months of expenditures to have in your general fund is a good measure. But that's just kind of my take on what you kind of should have. This graph just shows you all your governmental funds, and so this is your general fund and all of your special revenue funds, capital projects funds, and debt service funds all together. But all your revenues and your expenditures, and so we can see our expenditures have continued to exceed revenues, which is why you've had to make so many steps this year to kind of right that ship. So again, I would have put the budget amounts there, but that is a pretty tumultuous task to try to get all those numbers together. But you know what that looks like, and you've already tightened that down. So there's really not much more to say there. And then this last slide, there were quite a number of things happening here for the year for long-term liabilities. Additions to long-term liabilities were $45.7 million. Your deletions to long-term liabilities were $372.7 million. The biggest contributor in that was in claims and judgments. You had a $121.5 million decrease. Of that, $100 million of that was because of the consent decree going away. So that did result in a significant reduction in liability for the city. The other big decrease was in your net pension liabilities, which decreased on the whole $180.6 million across your municipal employees retirement system, both the firefighter systems, and then there's a little piece of municipal police with the state that's in that number as well. A large part of that, again, is favorable market conditions, which reduce the liability at the actuarial level, as well as just continuing to make contributions at the rates that are suggested by the actuaries. And then just continued pay down of about $55 million in bonds and your debt service to round that out. So while we know that these numbers will go back up with the recent bond issues, which is healthy because we need to have a continuous bonding program and have that cash flow, it was positive to see some of those large reductions, especially in claims and in the pension liabilities, because those are areas that, you want to kind of keep control over. Any questions?
Any questions from the dais? Councilmember McCarron.
On the bank reconciliations and collections, have you been in contact with Finance Department to ensure that they've made adjustments to ensure better compliance with the 24 hours of deposits? And if so, what adjustments? I mean, maybe I can ask them this too when they come up, but do you all make recommendations on how they can improve?
I haven't specifically talked at length, but I already had a conversation with them about us sitting down and specifically talking about what could be done, because it's a lot of different departments involved, and again, looking at the practical nature of that and does it make sense. I also have this problem, I don't say problem, but this particular exception at almost every agency that I have that's large like this, because it is somewhat problematic sometimes to get it from point A to the finance department, and get the deposits done. But I definitely think there are ways to get that and make that happen. So it's just sometimes there may be something that happened after a cutoff time where they did receive it, but maybe they got it at 4 o'clock and they made the deposit at 3:30, and it's just kind of stuck in that, and the law doesn't really account for that. So.
Okay, thank you.
Any other questions? All right, thank you, Becky. We appreciate your audit and your presentation.
Thank you so much. I appreciate being here with y'all.
Next item.
Item number 7A is motion M26242, which is being deferred to August the 6th. Item number 7B is motion M2644. We need to suspend the rules to add it to the agenda.
I'll move to suspend the rules. Can I get a second? Seconded by Council President Morrell. All in favor? It passes.
All righty, and I understand that Mr. Wiltie is here for discussion only today.
Okay. Mr. Wiltie, please come up.
Good morning. So we're here today to try to move forward.
I think that mic is not working. If you could switch. Thank you.
Good morning. That's better. Thank you for having me here today. I'm here to discuss the CAB administrator role. It's a role that has been in the works for some time. This would be our Central Adjudication Bureau. So think all civil adjudications under the city code, your Chapter 6 hearings, everything from code enforcement, minimum property maintenance, to STR, to zoning, to health, VCC, HDLC, are all going before third-party hearing officers, which are outside attorneys who have at least 5 years experience. And the CAB administrator really manages that part of the ecosystem. So think a clerk of court for really civil adjudications for the city. That's what we're here to discuss today.
Questions about this position? Council President Morrell.
Thank you, Madam Chairwoman. So Austin, I guess from our perspective, I know that CAB has been problematic for a tremendous period of time. I know that we've had long conversations regarding citizen interaction with CAB, the quality of hearing officers. How has that played into the effort to fill this position going forward, and what's the administration's general plans or vision of what CAB's going to look like going forward?
From the last administration, having my boss attend the Tuesday meetings with you guys and do what I call a round robin every Tuesday has been super helpful, kind of that conduit of information so that we can hear those complaints firsthand. And I know I took those meetings on March 10th and met with each of y'all and kind of went over the priorities. At that time, we identified 15 priority cases from each district, and that's and then at large, I don't think you were there that day, actually, Council President, but of those 15 cases, I think there were 136 total. I'm pleased to report that 134 of them have moved forward through adjudication. There's still a couple big ones like 6700 Plaza Drive, which will move forward on the 20th. So I think I say all that because having the CAO kind of reprioritize what the metric for success are and the different levers we can pull on has been super helpful. Happy to provide some examples of things that we've been working on, whether it's print and mail or, bilateral interfaces with IT, with John Wisby, who was just here presenting, with, Treasury. I mean, those are kind of the big picture initiatives, and having somebody to be able to focus full time on the administrator role, I think will not only help with the engagement with the public, but also these other priority initiatives.
Any other questions? All right, thank you for the discussion. Thank you for appearing.
And we'll add it to the regular agenda for Thursday's meeting.
I appreciate that, Ash.
And the final item is number 8, which is the May 2026 budget report and executive summary.
I believe that Abby's going to present.
Yes.
Thank you.
Good morning, everybody. Abby Vian, Chief Performance Officer for the CAO's office. I am going to be here today representing the whole team, so I'll do my best Brandy and Alyssa impressions, but if you have questions for them that I can't answer, we might just need to follow up with you after this meeting. So as you can see here, this table summarizes our net position as of May 31st. As you can see here, our net position was a positive $91.9 million year to date. Our revenues look like they are about $22 million above budget, and our expenditures are about $33 million under budget, contributing to that final net position. Our year-to-date revenues totaled $392.5 million through May 2026. This exceeded the budgeted $370.4 million, and it exceeded our prior year collections of $346.2 million. So our revenues are trending favorably across the board. Our year-to-date combined personnel and other operating spending totaled $300.6 million through May 2026, which is about 37.6% of the annual 2026 adopted budgeted expenses. So as you can see here, we're trending below what we're considering a monthly benchmark level of expenditures, though we do know that expenditures don't occur at a flat rate each month, and so any expenses that occur in the latter half of the year could cause those numbers to rise, and so we'll continue to report on those expenses. As we've discussed in prior presentations, the overtime spending across the board is down significantly. We've seen declines both compared to prior year spending and compared to projected overtime spending, and even compared to the budget. So right now we're trending at just about 36% of the annual overtime budget, with about $14 million expended as of May 31st. And so we're trending at a below budgeted levels, and we expect to see some savings by the end of the year on overtime. As of May 31st, there was a 5% vacancy rate with 248 budgeted positions unfilled, which represents a reduction in vacancies from prior months. This is attributable here to our temporary summer positions. We have our summer youth participants, and so we expect those numbers to go back down at the conclusion of the summer. And lastly, we report an audited ending position in 2025 of $67.3 million, as Becky reported, in our general fund consolidated fund balance. And as of May 31st, combined with that number, the unaudited fund balance level was $315 million. Any questions?
Any questions from the dais? No? Council Vice President Willard.
Thank you. Hey, Abby, good morning. I saw for the period, the recent period, that the expenses were greater than the revenues. Was there something that particularly made that for this period? I think it was like 14, yeah, it's about 14 million.
Yeah.
Is there something higher this period, or an anomaly or something?
I think Alyssa can speak to the details of revenue collections, but the way that we have the revenues and expenditures budgeted is a little bit different. So our revenue budgets are based on the forecasted revenues for 2026. So when we expect those revenues to come in, which we know is greater at the beginning of the year than it is at the midpoint of the year.
Gotcha.
Our expenses we budget it on a flat rate. So just, divide the total budget by 12. And so you see our expense budget remaining stable, and our revenue budget is going to fluctuate. So I think that that's just most likely explained by the fact that revenues come in at a higher rate in the beginning of the year than at the midpoint of the year.
Okay. And then I wanted to, ask about sales tax collections.
Mm-hmm.
I think we're more than halfway through the year. We haven't hit the 50% mark on sales tax collections yet. Is that kind of a pattern that we see? My concern is that, the next couple of months probably are going to be slow for sales tax receipts as well. So just wanted to see if you guys are concerned about that at all, hitting that mark on the sales tax receipts.
Sure. I can't speak to whether there is concern at this point. Again, that would be something that the Department of Finance could weigh in on. What I can say is that as of July 10th, the report was that we were at 94% collected on property taxes and 45% of sales tax had been collected. So we are approaching that 50% mark on sales tax.
Okay. Thank you.
Any other questions? All right, thank you, Abby.
Thank you.
Ashley?
We can move to adjourn.
I move to adjourn. Councilmember McCarron, second. All in favor? All right, thank you.